We are now going to switch over to the investor pitch competition. Now, once again, Tracy Ryan was supposed to be the host for today, and I, Dr. Dave, was going to just be the moderator for the investor pitch competition. Unfortunately, Tracy's not feeling too well. We send her positive vibes, positive energy. Hopefully, she feels good sooner rather than later. If you're just tuning in now to the investor pitch competition, what I'm going to do is I'm just going to reintroduce myself very quickly. Once again, my name is Dr. David Kunick. I've been in the cannabis sector for over 10 plus years. I've been in the medical field for over 18 years, and I've been a business owner for over 20 years. I actually did work with a former general manager of an NFL football team, and when he read my history, he kind of joked around. He's like, "Dr. David, you're the triple-headed dragon." I'm very blessed to say I've taken a company public. I've raised a lot of capital over the last 10 plus years for cannabis and non-cannabis companies. But enough about that. Let's sit here and let's go over the gist for today. Today, we're going to be having our investor pitch competition. Welcome everyone and all our presenter companies. Welcome, and all our judges. Welcome today for being here. I'm very, very excited to announce that we have 8 investor judges. Why do I bring this up? Is that these investor judges have experience. If you're a presenting company, pay attention to what their constructive criticism is. What will happen here is that uses constructive criticism to help your pitch get even better. And if you can make your pitch even better, that will go a long way to try to get you that investment capital that you need. We have 8 companies that are presenting today. And I want to bring up a really key fact here about the investor hot seat. Over the last 4 months, the investor hot seat has had over 600, I repeat, over 600 companies register for this event. Today, we have 8 companies sitting here who will be presenting. So let's go over the schedule. I will remind you, if you could, just make sure you put yourself on mute so people don't hear your background noise. The investor pitch competition will be approximately 2 hours long in length. The goal for the investor pitch competition is for investors to learn about these investment opportunities and to connect companies from different sectors of the industry who are seeking additional sources of capital, as well as in the hunt for new investors. As I already mentioned, today we're going to be watching 8 innovative companies present their investment opportunity to a panel of experienced investor judges seeking these investment opportunities. At the end of the 8 presentations, the investor judges will decide which they feel is the best company that presented. So what will happen is that we will have approximately 12 minutes per company. It's recommended that the companies do about 6 minutes of presenting and leave 6 minutes for Q&A. The judges will only have 1 vote. I repeat, the judges will only have 1 vote at the end of the competition on who they can vote for. Before I continue on, though, after the investor competition, it's very important to realize we also have a networking event after this. With this networking event we have after, I recommend all the participants, all the investor judges, all the accredited investors who are here listening in to attend the Zoom networking events. Remember, it's called networking. You need to work when you network. And you'll be amazed how many new potential investor leads you will get by networking. So with that being said, make sure you submit your questions on the chat room. Okay. And the questions put in the chat room, make sure you put all panelists and all attendees. I had a few people already today send me some questions and they say, why aren't the participants responding? I go, because you only sent me the message. So make sure you select all attendees and all panelists. As a reminder, if you're wondering who's presenting today, if you want any information about myself or the panelists or any of these investor judges, make sure you go to the website, investorhotseat.com. Once again, investorhotseat.com. So with that being said, we're going to now do a quick introduction to all our investor judges. Investor judges, I have a timer here. You have 90 seconds to do your intro about yourself. If you go over your 90 seconds, I will do a light dong for you. Okay. So the very first person I'm going to introduce for our investor judges, who I'd like to give the floor to first, is Adam Remus, CPA, president founder of Eurocana CFO.
Hi, David. Thank you, everyone, for joining today. It's going to be a very exciting presentation. My name is Adam Remus. I'm a CPA for 25 years. Last couple just focused on the cannabis, hemp, and CBD markets. I own and manage a Eurocana CFO as a company, and we help companies provide and solutions from an accounting, tax, and CFO perspective. In addition, we've started out a brand new CFO magazine specifically to the financial executives and investor community called Cana CFO. So if you'd like more information about that, please reach out. Thank you, David.
Adam, please send, if you could put that link in the chat. I know for myself, even my investors, I think that'd be a great publication for us to listen. So if you can maybe put that out there, that'd be great.
Absolutely.
And Adam,
it already has over 120,000 opted-in subscribers because it's going to be part of the Investor Cana magazine group. So it's going to be a very large publication, and we're starting up here in the next couple of weeks.
Great. Excellent. I appreciate that, Adam. I look forward to you putting that information in the chat room. The next person who I would like to introduce, and by the way, Adam, thank you for saying under 90 seconds, is Carol Ortega, Managing Director of Musica Capital Group.
Hello, everyone. My name is Carol Ortega. I'm originally from Bogota, Colombia. I work in California, and we cover pretty much all the Americas. I'm the founder of Latino Investment Summit. We are here very excited to hear all the initiatives in order to bring some capital from Latin America and other regions in the world from our accredited investors network. Thank you, Brad, for inviting me. Great event. Congratulations.
Great. And thank you for being here. And just really quick, Carol, where are you based out of right now?
Right now, I'm in Bogota. I'm in Bogota due to the quarantine, but we are headquarters in Los Angeles. And, you know, we are empowering our communities, bringing the Latino communities into the industry, supporting them. And also, you know, there's a lot of wealth in Latin America that is interesting right now in investing in essentials. And we are now an essential industry. So there's a lot of opportunity to bring money from Latin America as well and create wealth for everyone.
Excellent. And this is, and if you missed the beginning of today's event, something I've mentioned is that we have people from all over the world here, from numerous countries, and, you know, from John Nemanic, you know, doing stuff in Canada, US, South America, Carol doing stuff here in the US, also in Latin America. This is another reason why to check out this event. Or to even, if you're a company looking for funding, you might want to go and maybe apply to have your company present to you, especially if you're a company based out of Latin America. You have a lot of investors looking in that area. The next person I like to introduce, and once again, they'll have 90 seconds to introduce himself, is Jeffrey Glick, CEO of Start You Up.
Hi, everybody. My name is Jeff Glick. I'm the founder of Start You Up. We're basically an outsourced CFO firm. My background in cannabis is I was CFO of a private equity fund that invested in cannabis. And also I was the CFO of a SPAC, Special Purpose Acquisition Corporation, where we took a cannabis company public late last year. They have operations in Colombia, and through a Canadian holding company, they were able to get on the NASDAQ here in the United States. Really excited about the opportunities in the industry and love to hear what everybody has to say. As a CPA, worked for Salomon Brothers, Merrill Lynch. I did M&A for them. Thank you very much.
Great. Thank you so much. And once again, we talked about management teams, and something that we're happy that Jeff is here, because sitting here taking the company to go public, working on international companies, he's a great ally to have here and to be an investor judge. Jeff, thank you again for being here. The next person, the man, the myth, the legend. If you're not connected to him on LinkedIn, I would highly recommend. He's always posting great content. John Nemanic, partner of Green Coast Capital.
Sorry about that. I forgot to unmute. I had some background noise here. David has already done a wonderful introduction of myself. Just check me out on LinkedIn. I just want to say that I feel very privileged to be here. And by the way, Dave, you're doing a fantastic job. Seriously, people don't understand how challenging it is to actually host this type of event. And for you to do it basically on the last minute's notice, you have my deep respect.
Appreciate that, John. Much love. Thank you so much. And
Well,
John, because you got a few extra seconds, really quick, could you just tell the audience in less than 25 seconds some unique sectors you're looking at right now?
I'm actually invested in a lot of different areas. I've been doing a lot of mining, private placements. I've been looking at cannabis private placements as well. And another area I've been focused on is psychedelics.
Great, excellent. And I'm happy you brought up the psychedelics part because that's something where we're seeing a lot of people almost investing in both cannabis and that psychedelic region as well too. The next person I'd like to introduce as our investor judge is Kevin Clancy, managing partner of Clancy Consulting. Thank you for being here today, Kevin.
My pleasure. My pleasure. My name's Kevin Clancy. Happy to be here. Appreciate the invite from Brad. I've worked closely with the ArcView Group, not only providing controller services for their company, but also vetting projections and financial analysis for the various companies that come through their pipeline. And then I've worked closely as well with Armanino LLP CPA firm that I have some close ties with. So I'm really here to just kind of get an idea of what these companies have to offer and see if I can offer some constructive advice.
And Kevin, I appreciate you saying that, constructive advice, because people forget when you're raising capital, there's less than a 4% success rate. So think about it, for every 100 people you're pitching to, you'll be lucky to get 4 people. So you know what? It's all about constructive criticism. And if you say no, it's always nice to learn why someone said no so that company can learn from it and maybe make the proper edits. The next person I'd like to introduce as an investor judge is Noble Drutz, and I apologize if I mispronounced the last name. And Noble's the managing director of Drutz Capital Partners. You there, Noble? Noble, we're gonna come back to you. It's all good. The next person, I'm proud to say, is a friend of mine. I met him in Philadelphia a few years ago. I always enjoy talking with him because he always brings a different perspective. So I always learn something. I'd like to introduce Scott Berman, principal of the Panther Agency.
Thank you, David, and thank you for Brad setting this up. I agree, David, you're doing a great job. Really enjoying the moderator. So co-founder of the Panther Group. Since 2014, we've made about 35 investments in the cannabis space, about 22 different sectors. So plant touching, ancillary, fintech, trade shows. We really like to look at everything. We have about 500 deals on our folder that we look at regularly. So we study the space very carefully. We also have a consulting business. You can find out more at institutionalcannabis.com. On the About Us page, it shows all of the companies that we're invested in. My background is in digital marketing, so we also offer digital marketing solutions to the industry. Be happy to chat with anybody about that too. Thanks again for having me. Look forward to the pitch.
Great, and Scott, I appreciate talking about also the digital side of things. And you know, one thing that people forget is that us investor judges, we talk to one another offline. You know, we'll sit here, and if a deal comes across our table that we might have a couple questions about, we might reach out to someone. I'm proud to say that I've touched base with Scott numerous times over some deals where I want his perspective on it or his group's perspective. And that's where it comes down to networking, getting to know one another, and really using a multidisciplinary approach we talked about earlier today. The next person, once again, his constructive criticism is always spot on. It's someone I've gotten to know better over the last 18 months. Terry Buffalo, CEO of the American Cannabis Company. Terry, thank you so much for being an investor judge today. Why don't you tell us a little about your background?
Thanks, David, for having me here. And thank you, Brad, for having me back on the show again today, or the event. I spent about 25 years in the investment business. I worked on Wall Street. I ran and owned brokerage firms. In 2013, I decided to leave that area. In 2015, I found the cannabis space. I joined American Cannabis Company in 2016. I'm currently the CEO. The company is a publicly traded consulting company trading on the OTCQB. We provide seed to sell solutions and also products to the cannabis and hemp industry. And recently we are looking at acquisitions in the plant touching space. And I'm glad to be here today, and that's what we're looking for. And again, thanks, Brad, for having me back.
Thank you for being here, Terry. And Terry, I think it's great that it's interesting, even just reading the chat room right now. You're getting a lot of love. People saying big follower for you. You always have great content. And once again, the power of LinkedIn. To all the judges, please make sure you pay attention to each company. Okay, you remember each judge, you get one vote. Now to the audience and to the participants, at the very end, after all 8 companies present, will pop up in the chat room is a survey where you will be able to vote yourself, because there'll be an audience winner, and then there will also be a winner selected by the judges. Also, too, please bear in mind for the presenting companies, you have a total of 12 minutes. For the judges, raise your hand if you have a question. We have to make sure we stick to our format. So with that being said, I think we're going to move on now to our first presentation, which is Richard Ehrlich, COO of Iconic Wellness and Provisioning. Richard, are you there? And are you ready to kick this off?
Sure. Can everyone hear me? Well, can you hear me, David?
Yep, I can hear you.
Great. Okay, here we go. I'd like to welcome you to the Iconic Wellness and Provisioning Investor presentation. My name is Richard Ehrlich, and I'm one of the 3 founding members of Iconic. It's important to understand my extensive experience in representing investors personifies my allegiance to all shareholders. We carefully constructed our capital structure to give investors a special opportunity. Cannabis is becoming mainstream. 39 states have legalized medical cannabis, and 15 of the 39 states are legalized for adult use. Over 270 million Americans live in states that permit the use of medical cannabis, and 93 million are permitted for adult use. Legal U.S. cannabis revenues were $12.4 billion in 2019, $16.3 billion in 2020, and expected to approach over $30 billion by 2024. The legal U.S. cannabis industry will eventually be larger than the alcohol industry. The political landscape continues to make major strides to benefit the cannabis industry. If you don't use cannabis, at least consider investing in it. Iconic Wellness and Provisioning LLC is a fully integrated co-location cannabis company starting with our licenses in the state of Michigan. We are finishing up the balance of our friends and family round with the $700,000 remaining out of the $3 million round. Our pre-money valuation is $7 million. We are currently fully funded to open our dispensary this spring. Construction will commence in a couple of weeks. For Iconic Wellness and Provisioning, I deliberately mention our dispensary will be opened in a few months. Our capital structure is methodically tied in with our business plan, with placing our investors first. This means from day one, we're enhancing shareholder value as opposed to growing into a valuation. Almost 100% of our 2-tiered capital raise of $10 million will be applied to our tangible assets. Opening our dispensary first is the quickest way to optimize efficiency with an operating capital structure priority. And simple, your company needs to start off on the right foot for investors to see how they can make money. Who is Iconic Wellness and Provisioning? We have a nucleus of 3 managing members. Kevin Beebe is an experienced grower cannabis operator. Daniel Chilowich is a lawyer by trade, serial entrepreneur, and a cannabis operator. And my background is on the investment management and banking side. The management team also has a chemistry that dates way before Iconic. Iconic is a fully integrated co-location cannabis business. I emphasize fully integrated co-location since this is the building block of our company, but truly needs to be explained in detail. What I mean by this, so let me give you a few bullet points. Although cannabis is legal in Michigan, each municipality needs to opt in on their own. Currently, 20% of municipalities have opted in, leaving tremendous upside for expansion in the 10th largest state in our country. Additionally, each municipality creates their own mandates, which limiting licenses and placing zoning restrictions. That being said, selecting a site for our facility had many considerations. We believe our property in Sturgis, Michigan provides us the perfect platform to succeed. Our 7-acre facility in Sturgis, Michigan, provisioning, which is our dispensary, cultivation, and processing. It's unique. As we span the entire state, being very selective and particular with our needs, we're able to find the exact demographics we wanted while staying true to our business model. To whet your appetite a little, we have an early mover advantage covering a large radius with limited competition, barriers to entry advantage, and certainly economies of scale on a 7-acre facility. We're strategically located 2 miles away from the Indiana border. Cannabis is currently illegal in Indiana. Sturgis has a thriving business community, including an Abbott Laboratory manufacturing facility with 1,000 employees. Although our bread and butter is focused on our grow operation and initially set for 1,000 plants with plenty of space for additional capacity, having your headquarters, flagship dispensary, your grow operation, and processing all together is not an easy accomplishment. We have done that. At this point, I have a short video of the rendering of our dispensary to share with you, and I'll go over a few pages in our deck. Let me share my screen. Hopefully I won't take too long doing this. And I'll start off with the video. This will be about 45 seconds. I'll be quiet so everyone can take this in. Okay, I hope that didn't put anyone to sleep. By the way, we're making the dispensary pretty large to accommodate social distancing. Let me now get to our next slides. Second.
You have 6 minutes left.
Okay, great. I probably need 2 more minutes and we'll open up to Q&A. Move to page 4. Here's an aerial view mock-up of our facility. This is a little story, a true story I want to share with you, maybe get a little chuckles out of it. So a potential investor was looking at this page and he was able to envision the magnitude of our operation. He proceeded to say to me, I'm confused. Is your pre-money valuation 7 million or is it 70 million? So I'm reiterating that our pre-money valuation is only $7 million. I'm going to skip to page 13. On this page, I'd like to point out where Sturgis, Michigan is. See the bottom, the red area that says Sturgis and the arrow? So this, just Sturgis is relative to other dispensaries with a 45-mile radius between us. That's pretty significant. We're also, as you can see at the bottom, is Indiana right below us, which another page will depict that. On this page, this gives you a little more of location history, a little more of the demographic. The picture on the right, I kind of like this because as you can see, all the restaurants, all the fast food restaurants, so a great town to be in, especially if you're coming from the munchies. hope everyone chuckled there. Now this next
You have a little
page,
less than 4 minutes left, and that
thanks,
includes for
David.
Q&A, Rich.
Thanks. So 810 Broader Street on this picture, we're only 2 miles away from the Indiana state line and major highways and roadways connecting both. I'm going to skip to page 17. Here's our financial projections. Best way to conceptualize our earnings potential is to focus on the cost of around $450 to produce 1 pound. And the current retail price of a pound split into various products and quantities comes to about $8,000 a pound currently. So if you do the math, several pounds of cannabis makes a lot of money. Page 21. Is
Rich, you're now down to 2 minutes if you want to
okay.
ask questions.
Is our exit strategy. As I said before, our capital structure and business model is key. This provides us the flexibility for many exit options for all shareholders. So now I will open this up to the Q&A.
Thank you so much, Rich. So for the judges, I cannot see you right now currently the way the screen is, but feel free to go ahead. And who has a question for Rich? You know what? I'm gonna ask the quick question. Why so close to Indiana? Why'd you pick that?
Well, David, initially, the beginning cannabis players, they went to Detroit, they went to Ann Arbor, and they went to East Lansing. And that's probably where I would have went to a year and a half ago. But that's getting a little saturated. And a lot of these larger companies have also some cash constraints with them right now. So we thought we'd have to really think outside of the box. And although our grow can enable us, and we're seed to sales, so we can go out to many other cities within Michigan all throughout, especially when only 20% have opted in so far. But establishing our first headquarters should be special. We're really trying to make this a big impact initially. So being next to Indiana, where they're not legalized, can really cha-ching the register, so to speak.
Richard, this is Adam Remus. I have a question.
Sure. We have about 1 minute left. So just ask your question though, Adam, please.
280E taxes really are a huge impact here. And I noticed that cultivation manufacturing was lagging behind the storefront. Did you think about maybe reversing your strategy and doing cultivation manufacturing first?
Right. So that's,
thank you.
Thank you so much. So with our capital structure, you want to really start the business as quick as you can possibly do. You want to start revenues. You want to reduce your burn rate. The best way to do that is to focus on the operation that is the path to the least resistance, that's going to open up the quickest with the least amount of capital and give you some good cash flow. So when you're building out your grow operation, you don't have to dilute too much when you're raising the money. On the 280E side, we're fortunate enough where we're fully integrated, right? So our co-location fully integrated, we're able to take advantage of a lot of tax issues there. So it's not perfect. Anyone that knows 280 is not perfect, but us having it together, and we're also doing the grow basically a couple months behind the dispensary. So we're really not going to have an issue within this tax year.
All right. Thank you so much, Rich, for presenting today. I really do appreciate it. Full disclosure, we actually have several of our investors who've looked at his presentation, have actually met with Rich. But before we go on to our next presentation, which is Growbright, I am proud to announce that our last investor judge made it in time for Iconic Wellness's presentation. Noble, I'm sorry you had a little issues, but Noble, I would like to introduce you once again from Dracon Capital Partners. And Noble, if you could just give 60 seconds or less, a little introduction about yourself.
Hey guys, my name is Noble Dracon. I'm with Dracon Capital Partners. I've been raising capital for 28 years, and we have a website called the Accredited Investor Journal, which we send out and to a database of over 900,000 accredited investors, projects, ideas, as well as we do full interaction. I'm also a personal investor. I help startups find capital as well as we make investments directly. So happy to be here. And we're full spectrum. We've worked in the cannabis industry for the last 20 years, actually, when the big places to play were up in Northern California and Humboldt. So happy to be here.
Noble, thank you so much. I really appreciate it. And Noble, I'm the tying vote. I'm the tiebreaker. So I'm very happy you're back on because one of the unique things here is we always want to make sure we have 8 investor judges, where myself, the moderator, I'm the tie-breaking vote. And hopefully that does not happen today. So thank you again for being here. Richard Ehrlich, COO of Iconic Wellness and Provisioning. He's put his information in the chat room. So if anyone has any questions or want to reach out or get the full investor deck, and learn more about the opportunity, you can reach out to Iconic Wellness. As you already mentioned, they've already raised a significant amount of capital. So now the next person I'd like to introduce is David Drutz, CEO of Growbright. David, the floor is all yours for the next 12 minutes. Friendly reminder, 12 minutes is for your presentation and for questions. Make sure you get that constructive feedback from the judges. And the floor is all yours, David.
There we go. Thank you, David, and thank you, Brad, for organizing this great event. My name is David Drutz. I'm CEO of Growbright Biotech Incorporated. Over the past 4 years, I've been CEO of a THC company, which we took public in 2017, and since then, president of a THC hemp CBD consulting company. It didn't change. Just try and change the slide there. I apologize. There, nope. Yes, that's it. Sorry. How many of you or someone you know were affected positively or negatively in the 2019 hemp harvest? I'm sure a lot of you are now shaking your head going, oh yeah, I've been there. And that's exactly what Growbright really started to become 2 years ago when we first invested in the industry. 2019 harvest, as we all may know, was really a real shock to the farmers, investors alike, and the challenges of growing, harvesting, processing, extracting hemp on a large scale were truly evident. The 2020 harvest showed that in the industry still has a great deal to learn about this whole process. Right now, there's a stronger demand than ever for high quality THC CBD extracts in high volumes. Many farmers and companies that were caught with large quantities of biomass who are unable to process, dry, extract, and do anything with it are then caught and forced to lose a lot of money. The solution is Growbright. Innovative technology and consciously designed process from seed to sale to scale. Our patentable technology advancements in TFE systems will allow us to improve high quality volumes in remediation at the same time. Our module labs enable us to flexibility to expand and relocate our facilities at low cost. The market opportunity we all know very well. I'm not going to spend a lot of time on it, but as we all know, it's only growing. There's setbacks, there's problems, but the market is going to continue to grow. At Growbright, our mission is to consciously craft hemp-derived products from seed to CBD. We are setting new standards of quality and enabling our partners to deliver industry-leading products to their customers. Growbright is a CBD company with patentable Freon technology that delivers high-quality oils at scale. Our business model eliminates the risk of farming and allows us to set up Growbright on-site labs at any location with minimal investment and infrastructure required. We are focused on processing, extracting, and remediating biomass and can deliver top-shelf 100% THC products to our clients throughout the US and internationally. Through Freon extraction, our oil has a broader array of cannabinoids, even if using lower quality hemp. Our unique and gentle process to capture sensitive components normally lost through ethanol and CO2 extraction methods are captured. Terpenes are fundamental to the perceptive experience of CBD oils. Our technology and I'm sorry, gentlemen, I am reading this to stay on time. Our technology is specifically tuned to ensure that the synergistic aromas are preserved for the flower and give the depth and complexity to expertise that we've added. This means our products have a faster and noticeable effect. Since our labs are on our partners' facilities, Growbright can help grow, identify, and procure the highest quality CBD flower and biomass possible. We can then process it on demand to guarantee the absolute best representation of the plant. Lastly, using Freon technology, we are able to remove any THC without any degradation to the product, allowing us to sell 100% THC-free CBD oil. We have multiple significant revenue streams that reflect services from seed to sale. Our Growbright on-site model requires low capex, minimal investment, and we can easily set up and move at short notice. Our innovative approaches will result in the development and benefits of high quality and high yield CBDs from hemp. Growbright on-site labs will also be ISO and GMP certified and can easily be configured to our partners' needs. Lead times right now, we will be setting up within 8 weeks. This is a key to our exit strategy, which is pharma. Production will be required and ISO GMP certified facilities will be very attractive to large scale productions of high quality CBD products. As for our current partnerships, we have signed an LOI with an international engineering company and manufacturing firm to help develop patentable enhancements to the Freon extraction technology. We will be using this machinery in our facilities as well as making them available across North America. We have currently signed an LOI to set up our first lab in Vermont for remediation with an agricultural group called Green Top Farms.
David, 6 minutes left.
Great. All right, I'm moving quick. Right now we're currently negotiating a letter of intent with a lab out of Colorado, and that's it. I'm going to just skip really quickly to background of our team. My partner, David Johnson, who currently runs and operates a licensed THC extraction facility in Colorado, our COO, lots of technology. Our operations has set up over 20 facilities in the THC and hemp industry. And Cody is a very, very talented grower. Revenue, real quickly, we're projecting revenues of 2.5 million in year one, starting end of March, which will be the first month of production. And with the second year and third year being 11 to 17 million respectively. Our EBITDA in year one is 1.2 million, second year 6.4, and third year 10.5. And you can see it right there. Long story short, we're looking to raise funds to finance the operations in Vermont and Colorado. 65% of the $1 million would go directly to capital expenditures, and the rest will for operations. And we've already raised $200,000. I'm sorry for going over.
No, it's okay. You know what, David, it's fine. So we got a little less than 4 minutes left. So judges, what questions do you have for David and for Growbright?
May I lead?
Yes, Jeff. Actually, John, you go first, and Jeff Glick, you go second, okay?
Okay. Very quickly, I'm intrigued by your patentable Freon technology. Other than the fact that Freon can blow holes through the stratosphere if you manage it properly, it's actually it would seem to me an excellent alternative to ethanol, which I don't have to explain what the dangers of that is. And as for CO2 extraction, well, everybody thinks of that same, doesn't really understand CO2 extraction. So how, you mentioned that it's patentable, and to me that's intriguing. On what basis do you make that statement?
Okay, two things. Freon is completely non-combustible.
Yes.
In the use, and it's environmentally, so it's a sealed system. So there's no,
Okay.
so ISO, there's no certification, no combustibility, no level 7, no level that. Second of all, what we're going for with the patent, of course, Freon systems have been around 40 years. What we're doing is Freon has never been used. Hemp or THC is a very tough plant to extract. So what we've done is with the Freon, we figured out how to do it, but it's very inefficient. If you look at our revenue models, we're making a lot of money, but based on very low volumes, because to remediate and to do, it's slow. So right now we're having them develop a system that does 5 times what we can do in one machine.
Great,
Great,
excellent.
great.
And
Thank
is
you.
it
And then-
patentable? I'm pretty sure we have something
so-
there that
So
absolutely
David,
does.
let's because we have about 2.5 minutes left.
Sorry.
No, it's okay. This is
That's
why
good.
it's really important, that we always want to leave enough time for Q&A. Jeff, you had a question. Jeff, what is your question for David?
Yeah, it's more of a comment. Great presentation.
Thank you.
I mean, makes a lot of sense. I just find that if I'm at a pitch meeting like this or elevated type of event, people invest in people. And I don't think you're hitting the facts that you've done this before. This is what and my team have done in the past. We took X to X. We got this EBITDA. We sold for Y. That's what investors want to hear. That's what's going to get them to get into your details more than anything, I think.
I agree 100%. What we're doing here is, as you said, we've already done. Everybody has done in part or in whole this whole mechanism. We're just setting it up in a
Right, but tell me that. I want to know.
I now seeing that. I'm seeing what you're saying, and I'm not showing that. I haven't
Right.
explained our past experience.
That's
to the point.
people. Just to reiterate, people invest in people.
Yep.
And am I going to give you my money, and are you going to return it and be a fiduciary of my money?
Mhm.
That's it. Okay.
Great.
Real
We
quick,
have
David.
about a minute left. Noble, do you have a question?
Yeah, I have a quick question. So David.
Great, Noble. All you.
Okay.
You're the last question for David, all right?
Yeah, awesome. And so Jeff, I piggyback on Jeff's statement 100%. I've been doing nothing but raising capital for 28 years, so I'm with him. But the question I have is, people send me all the time equipment that they're selling because they're converting. Didn't work. They failed. And right now there's a glut of equipment on sale. Who is buying your CBD? And I've been on the board of Marijuana Company of America. I've been on board of several companies. But who's buying your end product? And do you have those contracts in place to make sure that your pipeline is fully complete?
So first of all, we're converting, everything's being converted straight to a high quality oil, which we hired a company to do a study on the market that on the volumes that we're creating, we probably will not even leave the THC vape market. We're not doing that much volume. With the pet food industry, the nutritional pet food industry, all requiring THC-free, high-quality oils. And as you know, there's a shortage. It's not really, I don't mean this in any arrogance, but I mean in the sense that if we make it, there are customers for the product. We've made sure of that, but nobody, as you know, will not sign a letter without, here's my product. They're just not going to. But we have 70 companies from that study that said they would like to see the product.
Thank you, David, for the presentation today. Noble, Jeff, John, thank you for the questions. I really do appreciate it. Once again, David, please put your information in the chat room. Please make sure you do all panelists, all attendees. If anyone has any follow-up questions, make sure you put that in there. The next company I would like to introduce, I'll be presenting is Greg Rovner, CEO of Healy. So Greg, the floor is yours. Remember, you have a total of 12 minutes. Make sure you try to leave 6 minutes left for Q&A so you can get as much feedback as possible to see the level of interest from these investor judges. And the floor is all yours, Greg.
Thank you very much. Assuming that you could see my deck on the screen.
Correct. Yes.
Wonderful. Thank you very much. Yes, thank you for the intro. My name is Greg Rovner. I am the co-founder and CEO of Healy. We started Healy in 2017 with the purpose of providing access to trusted alternative medicine service providers. Since our launch, we have tripled our revenue year over year. In 2020, we generated almost $5 million in gross sales on the platform, which is worth around $1 million in net revenue to us. We are raising our Series A to become the leading SaaS company for cannabis and alternative medicine businesses. And here's our story. Healthcare is changing at an incredible pace. This has been vastly accelerated by COVID. The companies that are digitizing healthcare today command incredibly high valuations since more and more people are ready to embrace telemedicine. In 2019, almost $100 billion was invested into the telemedicine space. In 2020, since COVID, non-urgent telemed visits spiked over 4,000%. The problem is that alternative medicine has been left behind. The solutions that exist today are geared towards hospitals, urgent care, and primary care facilities. They are expensive and they do not provide all of the features that alternative businesses require in order to operate. We launched Healy because 88 million Americans spend $100 billion on alternative medicine every year. And we believe that we can capitalize on this opportunity. Let's take a closer look at our market. We've identified 94,000 alternative medicine businesses in the United States with this exact problem. Since currently the average business pays around $40,000 per year to use our platform, we get to a direct TAM of 3.7 billion. Now, here are some of the businesses that are actually a perfect fit for our platform: cannabis clinics, ketamine and psychedelic clinics, dispensaries and other retailers, NLP coaches, nutritionists, and much more. We solve the problem for them by providing a telehealth SaaS platform that brings alternative medicine businesses online in a fashion very similar to what MindBody did for yoga and fitness. We do this by providing a platform that streamlines the core functions necessary: telemedicine, marketing, data management, and e-commerce, thereby cutting costs and increasing revenues for our customers. Let's dive into the ROI a little bit. The average customer pays around $3,000 per month to use our platform. But as you can see, the benefits vastly outweigh the costs. They are able to generate additional revenue by having access to a larger patient pool. They save around $4,000 per month in admin fees because of the streamlined workflow we provide. By combining the software of Calendly, Dr. Kronos, Stripe, DocuSign, they are able to save about $1,000 per month on software subscriptions, all by deploying our easy-to-use, all-in-one solution. Healy also provides built-in marketing automation, which is something that your average alt-med provider has no idea about. Businesses that deploy Healy receive an ROI of about 270%, or about $9,000 in monetary value. Let's take a look at a few examples of our customers. Dr. Cheryl deployed Healy for her clinic in 2017 because she wanted to create an online offering for her patients. Her clinic has been growing 25% year over year as a result. She is using Healy for our video conferencing, marketing, and e-commerce in order to power her business. Dr. Milanis was able to launch Rejuve IV from the ground up in less than 30 days exclusively through the use of our platform. Milanis uses Healy to manage payments, scheduling, and his data. These two customers are not just isolated cases. They reflect our product market fit. With a 112% dollar net expansion rate, clinics actually grow by deploying our software. 4 years and 40 customers later, we have already been able to bring 300,000 patients into our ecosystem. Our business model is incredibly simple. We take an average of 20% of each transaction on the platform, which leads us to the following unit economics. Our fully loaded customer acquisition cost is $16,000, and it takes us about 5 months to recover that cost. We are projecting a churn of 1.5% monthly, which gets us to a lifetime value of $240,000, which is a 15-to-1 ratio against our customer acquisition cost. We grow by targeting the 94,000 alternative medicine businesses that we identified. We get prospects into our funnel by using our digital marketing strategy, and then they're converted by our salespeople at approximately 1 customer per month. And to keep them on the books, we provide additional features based on customer feedback to further simplify and grow their business. This is our competitive landscape. Some of our competitors are like Cario and Practice Fusion, where they provide telemedicine, EMR, and basic patient engagement solutions. Others, such as Shopify, for example, while they're not direct competitors, they're often replaced by us for e-commerce, payment processing, and other services. We do not currently have insurance billing capabilities, as you can see, but that's because our customers are cash businesses that typically do
6
not
minutes
submit
left, Greg.
insurance claims. Thank you. As you can see, we are the only platform that offers everything an alternative medicine business needs to operate, helping our customers streamline every part of the process and make more money. Here's a little bit about our team. There are 4 full-time founders. Our technical founder has a PhD in computer science, and the other 3 have long careers in entrepreneurship, operations, and sales. And in addition to our executive team, we've got incredible advisors that have scaled great companies and have had some incredible exits. As you can see by our quarterly financials, we continue to show steady and consistent growth. We ended 2020 with 42 customers, and we will triple that amount in 2021. We will sustain a 300% CAGR for the next 2 years, and following this trajectory, the Healy platform will generate over $400 million in sales and over $80 million in net revenue by 2025. And we are here today raising $5 million in capital to accelerate our growth. We've got 3.5 already in commitments and 1.5 open on the round. We will deploy these funds to hire an additional 20 salespeople. We will increase our marketing efforts, and we will upgrade our software with additional features and improved UX. By 2022, with this money, we will onboard an additional 300 customers, grow our GMV from 5 million to 57 million, and take our revenue from 1 to 11 million. Thank you very much, and I hope you'll join us.
Great. We have about 5 minutes left for Q&A. Thank you so much, Greg. Which one of the investor judges has the first question? You know what? Let's get Carol.
Okay.
We're gonna do Carol. Then we're gonna do Deborah. Do you have your hand up too? So we're gonna go Carol, Deborah, Adam, Scott. All right. Let's bang them out really
Thank
quick,
you.
everyone, to have enough time.
Thank you. Great presentation. Can you please go again over the type of financial instrument you're offering? How much equity, if so, if it's a convertible note you're offering? Can you please let us know the details regarding that convertible note or whatever the financial instrument will be in terms of discounts, rates, and how much of your company are you offering, please? Thank you.
Yes, thank you. So this is actually an equity raise, straight equity. This is not going to be a convertible note. And we are actually in the process of putting the final touches on the term sheet with our lead. And they are the ones that are establishing the terms. So at this point, I cannot disclose the terms of the round, but we will be able to disclose the terms in the next several days.
Great, Carol. And then Adam, what is your question?
Quick question. Excellent presentation. Excellent. You
Thank
walked through not only the need, but really succinctly walked through every little piece. So bravo. In regarding to the marketing automation for your clients, can you better explain that and how that has funneled the growth for your clients?
Absolutely. So by deploying the software, they're able to immediately use all the capabilities that it has to provide. We are integrated with a few marketing automation tools. We're integrated with Twilio for their text messaging capabilities, and we're integrated with MailChimp and Mandrill for the emails. And so what happens is, first of all, the onboarding of the clinic includes the uploading of their patient base. Those patients get uploaded into the electronic medical record, and they fall into the cadence, the voice, and the messaging that we establish with our customer of the clinic as to, at what point do they receive text messages? What do those text messages say? What do the emails say? What is the message? How often do they receive an email? What services do we want to send emails out to get people back into the queue for so that they can generate additional visits and additional revenue? So basically the platform automates the kind of drip campaigns for these clinics and makes it so that they can increase revenues through cross sales, through upsales, and through just communicating with their patients in a meaningful way and getting them back into a visit.
Great, thank you so much. Scott Berman, I believe you had a question.
Yeah, thanks, Greg. Great job, great presentation. Can you talk about how the pandemic has changed the world of telemedicine? Where you guys were before, you were already heading down this road. The pandemic happened, and then what's happened since then to your company?
Yeah, great question. Thank you, Scott. Well, the pandemic, I was uncertainty at first, but the pandemic obviously had a positive effect. I think it was a couple of reasons. I mean, number one, we're one of the largest platforms in the cannabis space connecting patients to doctors that are, working with cannabinoids. And so prior to the pandemic, obviously we're focusing on telemedicine states. We had patient flow in about 6 states. And because of our business model, because of the agility of our tech, we were very well positioned to scale at the opportunity. And COVID essentially brought that opportunity all at once to where we went from 6 states to 37 states over the period of a few weeks. States that never considered telemedicine had opened up telemedicine, and this buzz essentially tripled our revenue in 2020 and grew our patient flow to 37 states as it sits today. And this brought other opportunities. There's other verticals.
And Greg, I'm going to interrupt you right there because I know that's because I want to get one last question in. Noble, you're the last question, so you can ask a question, and then Greg, you have 30 seconds to respond back to Noble's question. Okay.
Thank you.
Greg, great representation. I saw that you have a HIPAA compliant, I guess, video chat. Is the long-term goal for Healy to start actually working in traditional medicine, not just alternative? Because that's one of the biggest issues now that a lot of people don't have HIPAA compliant video.
Yes, we're very. Our platform's agile in the sense that we could be deployed in a traditional clinic versus an alt med clinic. The platform will work the same in any circumstance. We're very heavily focused on the alternative medicine space for a variety of reasons. Obviously, it's not as saturated. We think it's a huge opportunity because people are learning about alternatives, and there's a lot of misinformation about alternatives. And our platform leads with best-in-class doctors, best-in-class products, and that creates this this credibility that drives more customers into the specific services. So we believe the opportunity is in alternative medicine, and we believe that we've got a lot of work to do within that space. Maybe the future will take us to primary care, and we'll end up powering some other types of practices. But right now, we are certainly focused on our core competency, and that is alternative medicine. Just kind of a couple points.
And Greg, I'm sorry. But listen, Greg, I give you credit because you're like the micro machine guy doing what you need to do. The next thing is, Greg, you need to go you need to go into the chat room because you have several more questions for you. So please make sure you check the chat room. Kevin Clancy, I know we didn't have time to get to your question, but thank you for putting the question in the chat room. So Greg, put your information in the chat room. Make sure you do all attendees, all panelists, give your contact information, as well as look at the other questions that you have. Great job, Greg. I know 12 minutes goes very, very quickly. That's why every minute over 6 minutes, we don't get as many questions. So great job. The next person I'd like to call that's going to be presenting is Mr. John Capolino, CEO of Tigris. John, the floor is all yours.
All right. Well, thank you. I'm trying to pull up the share, and for some reason, it doesn't want to share it right now. You know what? We'll do this without the, we don't need the special effects. Thank you for the opportunity to speak today. I want to talk about our technology company called Tigris. We have a very simple formula for success. We manufacture 2 products. We make an extreme acid and an extreme base. These are new chemistries that we've patented that literally have thousands of applications in multiple markets. An example is we have an acid that can be used as a disinfectant that we've tested against COVID that effectively killed COVID in less than a minute at a 5-log reduction. That means it killed COVID 99.999% more effectively than most disinfectants, and certainly safer. What makes our chemistry unique is the safety aspects of the chemistry that can be used to replace hazardous chemicals. And the other thing that makes it unique is there are so many applications in so many vertical markets. So we talked a little bit about the cleaning space. We recently signed 3 contracts with international companies for $3 million up front on licensing using our chemistry as a replacement for the hazardous active ingredient typically used in disinfectants. One of the things everybody's aware of today is with COVID, people are using more disinfectants, which means more hazardous chemistry is going into the environment. And from a hand sanitizing standpoint, I don't know if you've looked at your hands lately from using all these hand sanitizers, it dries out the hands, and certainly putting hazardous chemicals and alcohol on your hands on a regular basis is not the best approach to keeping healthy. So we have an alternative chemical that can be used in disinfectant. It also is very effective in the agricultural space. We've run through this past year, we've done 42 trials in 7 states with 13 different crops. And when you add our chemical to the growing of any type of crop, we've seen increased yields in the crops of anywhere from 10 to 20%. Last year, we did about 350,000 with our ag tech subsidiary, Aqueous. We anticipate doing 2 to 3 million this year as we move forward on agricultural applications. Another application of our chemistry is used in the personal care cosmetic space. We recently completed trials with a leading manufacturer of cosmetics for leading brands like Estee Lauder and Revlon. And in the cosmetic space, we have the ability to take purified water that would typically be used to make a cosmetic formula for anything from a moisturizer to any type of tinted moisturizers or cosmetics, and have the ability to avoid using the preservatives. Because when we treat the purified water with our acid, we end up with a atmosphere where the bacteria can't grow, or that grows much slower. So we end up with being able to go to manufacturers and help them make their products better. Our company mantra is better everything, and we aren't looking to go direct to consumers. We are looking to sign licensing deals on a global basis to help manufacturers eliminate the need for hazardous chemicals that are typically used and replace them with a safe alternative. So from an investment standpoint, we would be considered an environmentally or impact investment, or even an ESG investment. Since we started the company, we have successfully gotten 6 patents granted, with dozens of patents to come behind it. We've built a brand new factory in Detroit for under $2 million. We generate gross profit margins of 50 to 60 or 80 to 90%, with EBITDA and cash flow of 50 to 60%. So a highly profitable business model with a small barrier to entry of a $2 million cost of building a factory. We are having conversations on every continent with potential strategic partners in agriculture and in cleaning and disinfecting. We're just launching in cosmetics. And then one of our more exciting opportunities is in biotech, where we see this as a potential replacement for some of the hazardous chemicals used in medical device sterilization. It has applications in wound care. And certainly we're in the process now of starting clinical trials as a therapeutic for COVID using a nebulizer. So when you look at the company, there are a lot of opportunities. 95% of our energy is focused really in 2 areas. That's agriculture and cleaning. Our R&D team focuses across all the applications. And our structure is we bring in outside resources to help commercialize. So as we look at biotech, we'll bring in a separate biotech team that would help commercialize that product line and bring that to potential licensing partners. To date, we've raised about $12 million. Our most recent round that's currently active is a $3 million round that is 2/3 committed or funded at a $4.76 price, which is about a $100 million valuation. We recently converted our convertible notes at $75 million, which was $383. That was this past fourth quarter. And then we're looking at a larger round of $5 to $10 million in the second quarter of this year.
John.
In the second quarter of this year. So to summarize, patents in place, brand new facility, commercialized 3 million this past year, many additional licensing partners in the hopper, an incredible group of scientists and doctors who have validated the technology. We're looking for great additional investors who bring some strategic aspect to their investment. We're looking for additional licensing partners and looking for leading companies in agriculture, clean tech, and biotech. And of course, we're always looking for management as we continue to build out the team. Thank you.
Thank you so much, Sean. I really appreciate it. Which investor judge has a question? Raise your hand. Who'd like to go first? Scott Berman, you had your hand up first, so you go. Scott, you're muted.
Hey, John. Hi there.
Hey, Scott.
Good to see you, John. So I want to talk about the competitive landscape for what you do. Because you guys have been working in different verticals, how does that give you an advantage over folks that are trying to do this for cannabis? And who would you say are the top players in your market?
So our agricultural application, we have two applications, Scott. One is as a soil amendment to help with crop yield. So we don't compete with fertilizers or nutrients. We compete with additives. So it's a very limited additive market. It's also not very regulated. It's done on a state-by-state basis. That's allowed us to break into the market very quickly. So our strategy is always to work with potential competitors because we think we make their active ingredients work better. So it's a real advantage, not necessarily competing against nutrients, but actually enhancing the nutrients. And on a global basis, we're looking for leading agricultural companies, of which some we're talking to, that would look to license our technology, go through the regulatory process, and take it to market in their specific country.
Thank you.
Great question. John Nemanik, you had your hand up. What question do you have for John Capolino?
First of all, John, great job, by the way, on your presentation. I mean, you certainly didn't need the PowerPoint. You did just fine. I think you got a great business. My only question to you would be is what would be your anticipated exit strategy?
Yeah, we have, Ronald Reagan had trickle down economics. We have trickle up economics. So we've created subsidiaries that day one we own 100% of, like our ag tech company. And then we're going to create liquidity by either signing very large licensing deals that we can share throughout the shareholder base, take that company public through an IPO or a SPAC, or potentially sell the whole thing. So we may get an offer. For instance, Steve Johnson, who is one of our advisors, the ex-head of the EPA under George Bush, he sits on the board of Scott Miracle-Gro. That could be a perfect partner to buy us out. So we're looking either to sell a subsidiary, go public, or sign large licensing deals to create liquidity once again from the bottom on up.
Great. Thank you very much.
Any other judges have any other questions at all?
Yes,
Noble.
Yeah, maybe I missed it, John. I really like the business in a lot of ways. What was the format of the investment exactly? Is it equity, convertible note, private placement? I was trying to, maybe I missed it, but I didn't understand.
Yeah, great question. Just to give you some history, we have funded the company with virtually strategic partners and many Wall Street managers of VC funds. We have a chief investment officer from BlackRock, Goldman, Merrill. So we haven't gone the institutional route because we've only raised about $12 million. Our next round in the second quarter will be a $5 to $10 million institutional round. This current round is straight equity at $4.76 a share. And what we're in the process also, I didn't mention, we're converting to a C Corp. So this investment will convert into the LLC literally for a week or two. And then everybody will be getting common shares in a C Corp, which can provide us potential exit strategies down the road.
To piggyback on that, so the shares that we invest in, will they be preferred or common?
Common. Everybody will be in common.
John, do you have anything else to add? We have 1 minute left. Do we have any other questions from the investor judges at all? So John, I actually have a question for you, and you have 30 seconds to respond for the last question. I like how you look at several different options for liquidity events, but what's your time frame? If an investor were to give you money right now, are you expecting the liquidity to occur in 12 months, 24 months, 36, 5 years?
It's a great question, and it's something we're very focused on because some of the original inventors are now in their late 70s, 80s, the guys that invented it that we partnered with a few years back. We're looking to get distributions into our shareholders, certainly, hopefully after a 24-month period, because we're in a growth stage right now. But that does not mean to say that an opportunity won't arise where we'll have the ability to sell a subsidiary ahead of that if we see the right opportunity. So we are very, very focused on distributions and getting liquidity to our shareholders, mainly because we owe it to our founders who invented the technology years back to make sure we get them some liquidity.
Great, John. Thank you so much. And John, you were perfect with your timing, enough time for Q&A, and we're exactly at the 12-minute mark. So kudos to you on that.
Thank you,
very
guys.
good job, John. It's always a pleasure seeing you again. I remember the first time I met you, actually, I believe in the state of Maine several years ago.
It
So
was, and then that was quite an event, if I remember correctly.
Yes, it was. So, so thank you again. Once again, John, can you please put your information in the chat room? Make sure you put all panelists and attendees. If you have any other questions, please reach out. John, I know for a fact you had at least 2 questions in there. So make sure you read the chat. The next company that's going to be presenting is Maxwell Kobe, CEO of Abstracts Tech. So Maxwell Kobe, you have 12 minutes. Please make sure, leave about 6 minutes for Q&A. As you can see, our investor judges are very engaged. And Maxwell, CEO of Abstract Tech, the floor is all yours. You're muted, Maxwell.
Thank you very much, everybody, for having me today. It's a pleasure to be here. And thank you again. It's an amazing opportunity. So I'm Max Kobe. I'm the CEO, co-founder of Abstracts. We are an innovative leader of botanical terpene-based flavorings and aroma compounds. And we specialize in cannabis and botanical research of terpenes, flavors, and aromas. We're a key ingredient supplier, a strategic key ingredient supplier to some of the largest MSOs and CPG brands in both cannabis and beyond. We're helping to pioneer terpene-driven sensorial experiences that are not only helping to shape the cannabis, but also the consumer packaged goods industry. Abstracts is really a leader in the space because we've specialized in being a licensed cannabis researcher and flavor house with 2 separate facilities to leverage the diversity of terpenes and aroma compounds that exist in cannabis, but also act as functional flavorings and aromas in a variety of applications. We are the only one of our kind. We're located in California. We partner with some of the biggest brands and MSOs to study their cannabis and genetics so that ultimately we can become one of the largest cannabis flavor and fragrance manufacturers in the entire industry by creating new and cutting edge intellectual property, analytics, and functional product formulations. I founded the company with myself. I'm a serial entrepreneur since the age of 18. I've been running my own startups for over 16 years with my business partner, Jack, as well as my brother, Kevin, who's our chief science officer, worked at a leading material research laboratory before pioneering cannabis and won over 15 different cannabis cups through his career. We've built an amazing team of PhD research scientists, formulation chemists. One of the gals that leads our formulation dev team actually invented Hawaiian Punch. We're having a lot of fun just leveraging the compounds found in cannabis to create unique sensorial experiences. The problems that we see are unique in the industry, mainly the limitation of consumer brands to be able to research, discover, formulate, and manufacture products beyond the restrictions of state boundaries with consistency. Ultimately, consumer trust is built through targeted, repeatable, and predictable product experiences, but without the technology, research, and teams, they are in large restricted in their abilities to create brand identities, again, across state boundaries, to map the aroma profiles of the cannabis they're developing to develop quality standards. The analytical standards currently existing in the industry are lacking. And then ultimately their ability to take that research and create functional flavorings that have global scalability are the biggest issues we see in the industry. Our niche is cannabis science and botanical research. We develop state-of-the-art technology to discover new compounds in cannabis and other botanicals, to research the function of these ingredients, and to ultimately create terpene and flavor standardization through our formulation department. Unlike other cannabis testing labs, we are a licensed R&D company. We developed our technology to be able to analyze cannabis and really pioneer exploratory research, which means that we're currently mapping over 400 compounds, including terpenes and aroma compounds in cannabis in both 2D and 3D applications. We've developed proprietary technology as well as our own analytical standards. Our company is separated into 2 separate manufacturing companies that allow us to capture the both cannabis and botanical ingredients. We study cannabis at Abstracts Labs and create cannabis-derived flavorings, and at Abstracts Tech, we're ISO certified food-grade manufacturing facility. We research cannabis, we create analytics to understand cannabis, we help our customers to not only develop product formulations, but finished goods. We extract the botanicals and cannabis at our facilities, and ultimately we formulate botanical terpene flavors and formulations. We offer our customers an innovation partnership to partner with them to help develop their formulations and provide lab services touching both THC, CBD, beer, alcohol, and other formulations to help them develop the ultimate spec for their product application so that they can send that to their co-packer to manufacture with our ingredients. We sell cannabis terpene extracts that we standardize through our formulation process, as well as botanically derived ingredients. Our botanically derived ingredients are distributed to over 33 countries. We had over 1,400 customers in 2020. We specialize in strain-specific, flavor-forward, isolated terpenes, as well as developing other applications, including TTB-approved terpenes, powderized applications, water solubles. We've taken our technology and applied it to both cannabis-derived ingredients, hop-derived ingredients, and hemp-derived ingredients. We have some amazing strategic partnerships with some of the leading universities, brewers, and companies in the space. We service some of the largest MSOs with exclusive supply agreements with some of the largest, including Cresco, Golden Leaf, Verano, GTI, including leading brands like Sherbinski's, Jack Hare, and even other companies like Anheuser-Busch and Sweetwater Brewing that have used our ingredients in their product applications. Some of the leading distributors in the industry represent our products, including Kushco Holdings, Marijuana Packaging, and Greenfield, which is one of the largest alcohol distributors in the nation. Like I said, we distribute over 33 countries, and every legal state will benefit from intrinsic growth with our existing MSO clients, with over 10% of our business coming from Canada. And we have emerging markets in Mexico, UK, and Asia. There's a number of different product applications for our ingredients. There's a number of opportunities to grow both within cannabis and beyond, leveraging terpene ingredients to create functional product formulations. Today, we're focused on cannabis and hemp, but really the opportunity is to be a disruptor in the supply chain for the flavor and fragrance, because we are pioneering cannabis terpene formulations. Cannabis is the most abundant source of terpenes in the entire world, yet research has been restricted, and Abstracts is the one pioneering research of these valuable aroma compounds that today contribute 36% of sales to the aroma category. Our go-to-market strategy is really focused
6 minutes left
around owning our cannabis niche, innovating new high-quality products, launching new products to address the new markets, including food and beverage and cosmetic industry, and then really owning our sales channels with our existing channel partners, distributors, sales reps, and targeted marketing. Our terpene market position is very unique. There's no one else out there that's a licensed cannabis research firm focused on flavor and fragrance formulations. We've done well developing the company from 2018 when we got established to 2020. We did 6 million in revenues. We had 1,400 customers this last year. 25% of our business in Q1 of 2020 was from MSO and key accounts, and 45%, grew to 45% in Q4. I want to open it up for questions. We're raising a total of $3 million at a $25 million valuation. And thank you very much for your time.
Great. So Max, so really quick, I'm going to ask the first question. What's the offering for the investment?
Common stock.
Okay. And minimum investment?
Today, we're just searching for our lead. There's no minimum threshold set.
Great. All right. And I'll turn over to the investor judges. Scott Berman, you had your hand up first, so you go first for your first question.
Thanks. Thank you, Max. Fascinating stuff. I'm curious about the competitive moat that you guys possess. It seems to be, you spend a lot of time on your facility and R&D, and where do you stand and how hard is it to duplicate what you've done over the last couple of years?
Thanks for asking, Scott. So a lot of it was exploratory research to develop our analytical standards to map the complexity of aroma profiles in cannabis so that we can create consistent product formulations that we can distribute elsewhere. So we've been researching cannabis for years. We've developed our own technology and licensing to do so, and a team of research scientists in order to get to this point today. We filed valuable patents on our formulations. if another competitor was to come in the space, they would have to set up licensed facilities. They'd have to develop world-class technology that only exists with abstracts in the cannabis industry, which is why we work with Sierra Nevada and others to actually analyze their hops and other botanical compounds. And the reality is that we own the relationships with a lot of these customers. It's not enough for a flavor and fragrance manufacturer to study cannabis that's old on the shelf because of the degradation of the cannabis. So we had to partner up and earn the trust of industry leaders like Sherbinski's and Jack Hare and Cookies and all these leading brands to study their cannabis fresh from the plant, and not just one. We studied 1,400 samples of different cannabis, collecting over 400 data points of every cannabis strain to develop our unique set of analytics that help us precisely recreate each one of these cannabis profiles.
Great, Maxwell. Well, what other investor judges have questions for Maxwell? Adam.
Maxwell, thank you very much. Great presentation. Can you walk us through how you came up with the $25 million valuation?
Sure, absolutely. If you look at us as a key ingredient supplier in the market at a discounted multiple to other companies and flavor houses, typically they'll be trading in anywhere from 15+ times future EBITDA. We're really set up to grow from 6 million to 12 million with our existing revenue guidance from our current clients. So we'll really benefit from intrinsic growth this year from purely a full year's revenue from existing clients, as well as some of the new market channels that we're moving into with customers like Anheuser-Busch. So today we're trying to take a modest approach to our valuation on top line revenue. We've sustained stable revenues of 6 million over the last 2 years, even inclusive of VapeGate and everything else that's happened. And so we're looking for a 3 to 4 time multiple of revenues. We are very flexible. We're looking for strategic partners. We've been fortunate enough to bring on some, and we have some soft offers currently, but again, looking for a lead, open to being flexible.
Great. Do you have any, Jeff, you're the last question, and so let's let you ask it. Maxwell, you have about 40 seconds to answer Jeff's question. Jeff, it's all yours.
Okay, so really quick, what are the risks that an investor will have if they invest with you, and how do you plan to overcome those risks?
I would say if you're focused on the cannabis space, purely shifting regulations, we work with we actually commissioned health studies with UCR to study the safety and efficacy of terpenes and vaporizers and edible applications. We've contributed some peer-reviewed papers to the industry to help regulators put in new regulations to help protect consumer safety. And then we're also diversifying the business into food and beverage, cosmetics, and other channels. So we've really done a great job of diversifying the business. We do not have a customer concentration risk exceeding 8% this year. And I think the risk will be diversified by continued growth in additional channel markets, applying the same technology that was pioneered using cannabis.
Great.
Excellent response.
Thank you so much, Jeff, for that question. Thank you, Maxwell. Unfortunately, that's all the time we have. Maxwell, as someone who actually used to own several cannabis testing facilities, I think it's great what you're doing. I know it's a tough industry, tough sector to be in, but the research is really needed for the plans. Maxwell, please make sure you put your information into the chat room. To all our listeners and participants, remember, if you go to the investorhotseat.com, you can get everyone's email address, everyone's background, everyone's website information. Maxwell, I also believe you have a couple questions in there as well too. With that being said, the next person that will be here, that will be presenting is Sergio Scour. I apologize, I mispronounced the last name. CEO of Buds. Sergio, the floor is yours.
Actually, I'm the one who's going to be presenting. David,
okay.
The pleasure to be here, but
no problem, Deborah.
Thank you very much.
So the whole thing is left for me. So can you let me share my screen? Oh, shit. Hold on a second. How do I do this? I'd like to share my screen.
There's a share screen function on the bottom. It's green, lit up with an arrow pointing up.
Hold on. Okay. Okay. Got it. Can you see it? I'm gonna start with the presentation as a small film, and then I'm gonna explain the
You
platform.
can't see it right now, Deborah. Your presentation is not being seen right now.
Okay, hold on. Who can share? Only host? All panelists? Okay. I don't know. I changed something there. Can you see it?
Hold on.
Can you see it?
Yes, it's up now. That's correct.
Okay.
You are a happy grower. You love your plants and to produce high quality products. Hi there. I want to introduce you a revolutionary idea. Ever thought you will never get a feedback from your customer? Was it good? Not good? Was it effective? Not effective? Ever thought that a great product should be worth more than the average one? How can you increase the value of your production by replicating great crops? Imagine how you could empirically identify the best plant for a certain condition or symptom. Relax. Here is Bud Buds, the best tool for growers ever. Bud Buds was especially designed for the small and medium cannabis grower. Before, growers needed huge charts to record their data, such as lighting, water, fertilizer mix, minerals added, temperature, and other information. Such charts often got damaged, lost, or destroyed, and you could no longer replicate exactly your exceptional plant. Now, all my information is kept in the Bud Buds platform. Every plant is given a birth certificate through a QR code that allows you to follow it from seed to the final consumer and for generations of the plant to come. You also get feedback from the user in real time anywhere in the world. So you will know where to improve and which produce was exceptional. By entering the rating review at the time of consumption, the patient will help identify the best plant for his condition. He can also share the information with his doctor in real time to adjust dosage and intake. Multiple reviews of the same plant will empirically prove its efficacy for a specific purpose and will generate a rating, creating value for the grower and results for the user. Try Bud Buds today. It is free. Available on Google Play and the Apple Store.
Okay. Whoops. Hold on a second. Okay. Can you see this screen now?
No, there.
Right.
No.
Can you see?
No.
Can you see my
We're not
screen?
sharing. No, we are not sharing.
Deborah, for the sake of time, can you just do
Yeah.
the other part of the presentation? Continue on,
Yeah,
please.
hold on a second. Okay. Can you see the screen now?
No.
Okay, share. How about now?
Yes.
Okay. So I hope you guys enjoyed our introduction. As of today, our platform has over 350,000 downloads, 150,000 registered users and visitors, and over 140,000 cannabis plants registered. These are some of the screens, including medical and recreational reviews. We have been downloaded all over the world, including some unlikely places like Iran and Saudi Arabia. However, our forte, as you can see here, is Latin America, where we are heavily present in 7 countries: Brazil, Argentina, Uruguay, Chile, Colombia, Peru, and Mexico, and where we have strategic partnerships with clinics and research institutes. The problem is that these markets are not yet regulated and monetization is quite impossible. We have great traction, all 100% organic, and this taking into account that we are in an unregulated markets with no marketing program, except for cannabis cups where BudBuds was used to compute the votes. From all the markets we researched, we have identified the state of Colorado as the ideal place to launch BudBuds in North America. This is a picture of revenues generated in that state between 2014 and 2019. And that is why now, after proof of concept, it's time for us to launch in Colorado. This is how we expect to monetize. Starting here with seed banks. Seed banks are interested in tagging their seeds and following them until the final user to get feedback regarding the quality of their seeds. For this service, they will pay us a fee. Each strain from the same seed bank will be given a single QR code allowing its traceability. Next, when receiving the seeds here, the grower will scan the QR code and will generate a second QR code linked to the first one. This will allow the grower to input all the information regarding each plant or each group of plants, if from the same origin and strain. He will then have and keep the exact recipe of how he arrived at the final product. At all phases of cultivation, the grower will receive just-in-time advertising, time for the phase of the cultivation that that plant is in. It is 100% target advertising, as you can see from these examples. It is a marketplace for suppliers. Going back, the grower will sell its products to either a processor that will produce oils, creams, edibles, or to a dispensary with the third linked QR code. This third QR code, when scanned, will function more as a label, providing the end user with all the information regarding the product, and will be used for the end user to input the review. In order to incentivize the end user to enter a comprehensive technical review, the grower will offer a 4% discount, seen here, down the chain. At the time of the review, the platform will generate a 2% discount coupon for the end user for his next purchase. The review will be available to the grower and all the participants of the chain of production. And when the coupon is redeemed, it will generate a 2% commission to us. Hundreds of end users' reviews of the same plant or strain will generate a value, a history, and quality control so lacking today. We also generate data reports here with information that today we already have that no one has, which could benefit the entire chain. Reports such as this that can be tailored to any of the participants from seed to user.
Deborah, you have 5 minutes left, so you want to kind of wrap it up in the next 30 seconds or so? Yep, perfect.
Yeah, we are looking for $400,000 to enter the US market, specifically in Colorado, against 8% equity in the company. We expect to apply the funds as described here, and our estimate returns are here. We are looking for a strategic partner also that understands the market to help our company take off in North America. This is our team. We have many years in business management experience.
Deborah,
investors.
Deborah, yeah. let's hold off there. So because we have less than 5 minutes left.
Yeah, yeah.
Let's
we
just
are
do
all
Q&A.
investors, and we are open to questions. That's all.
Great. All right. Which investor judge has the first question for them? I'm trying to see my screen. Terry, do you have a question at all? Yes, Terry, I'm gonna have you go. Terry, I'm gonna have you go first. John, you go second. Adam, you go third. So Terry, you have the floor right now.
Yes, I just want to argue, in any states in the United States currently, or is Colorado the first one you're trying to break into?
Yes.
Colorado is the first you're trying to break into?
Yes. We did a little research. I mean, we did a lot of research, and I think for us, the way the platform operates, I think Colorado would be a good place to start. And after that, California and other regulated states.
I just see the problem's going to be back at the growers for the labor intense for tracking all of this because there's already so many steps involved. So that might be a challenge unless there's some way you can figure out a way to have an API into some of the systems they're using now to track plants, like a metric system in whatever state you're working in.
Actually, they track compliance. They track for compliance, and they track also for quantity proposed. We track for quality proposed, and we can merge
in addition to quantity and all that, we do the compliance also for the qualitative compliance.
And we can merge with them the platform, so we can use the same QR code or the same barcode they used in order to follow all the experience she just demonstrated.
All right, excellent. John, you're next with your question.
Yes, Deborah, you mentioned that you're seeking $400,000 for 8%, which by my calculation would be a $5 million valuation. How did you derive that?
We actually, this is what our friends and family and others are paying right now. So we raised like 350,000 so far. Obviously, in the beginning, it was not that kind of valuation, but now it is. And actually, 2 years ago, we were being pitched by an American company, actually located in Colorado. And their estimate was they wanted to pay us more than this. They wanted to give us, I think, 7 or 8 million. But the deal fell through for other reasons at the end.
All right, excellent. Thank you for sharing that. Adam, what is your question?
I wanted to follow up on Terry's comment just a minute ago, my friend here as a chair. Deborah, metric is really important in Arizona, in all states, or in many states here in the United States. The information that you're trying to collect, I know you're trying to correct on quality, not quantity. But both. Okay, I understand. But you really should look into metric and make sure that as the grower can walk through those same steps that they have to do and required for metric, that it can also work for you. So it's more of a general comment from your development perspective, but I wouldn't really come to market here in the US unless you had that synced up.
Great question. And then Kevin has I think we have maybe time for maybe 1 or 2 more. Kevin?
I just want to say something. It's not that we are not in the States. We have many downloads in the US, but it's nothing impressive still because we haven't put any effort in marketing or anything.
All right, so Kevin's going to be the last question. Kevin, I'll let you ask a question, and then Deborah, you'll have 30 seconds to respond.
My main question here is, what's the critical user mass necessary for you to generate actionable empirical data on this stuff? And then just a slight comment regarding the video that you presented. I find that having an actual human do the voiceover instead of that text to voice kind of syntax, that kind of loses people sometimes. So maybe look into just hiring someone to do that voiceover for you.
Yeah, I actually, we were trying to see who had the best accent in English to do it. And then I decided that it was the machine.
Sure. Might be something to look into in the future though.
Yes, absolutely.
Regarding the critical user mass, what's the critical user mass to generate empirical data that's actually actionable?
2,000 growers is enough to generate enough information to get all the spectrum of the market. It's the same spectrum that you use. Imagine this, I live in Brazil. To have an idea of who will be the next president, we have 2,000 million people in Brazil. You have to interview 2,000 people, and you're gonna have a spectrum of what 2 million people are thinking about it. So with 2,000 guys, we have more than 70,000 growers registered in the platform today, from Mexico to Patagonia. So we have a lot
today we can tell you which lamp is the most used, what is the best selling fertilizer, what is, I mean, in Latin America,
Deborah
we have
Sergio, I'm sorry, I appreciate the presentation. I like the questions. Please make sure you check the chat panel because there were a few more questions in there. Please make sure you put your information in the chat panel as well too. Make sure it says all panelists and attendees. Once again, to all our participants, if you go to investorhotseat.com, all the information is there. The next company that will be presenting is Simon Legal, co-founder of Driftless Extracts. And Simon, the floor is all yours.
Great. Well, I appreciate everyone giving me some time today. Just 1 second here. Can't get my slide deck to go. So I'm just going to get started. And, you know, Driftless entered into the market a little bit late into the hemp market. Wisconsin legislated not till 2019, where we allowed really a full production season. And so we entered in with a 3-phase business plan to capitalize on cash flow cannabinoids, and then lever some of those funds into ultimately what is the bigger target, which is renewable materials. We want to be in the renewable materials market, which by estimates are a $425 billion market by the year 2027. We launched with a founders team of about 6 individuals. It's a family-oriented story. My father there is Ed Senior on the right-hand side. He's got a background. He's in soils. He's got a master's in soils from UW-Madison. He ran the University Soil Lab for 6 years. His grower network is about 70,000 acres here in Wisconsin. We're going to lever that network in the renewable materials space. And the rest of us have professional backgrounds in a wide range of fields. So structural engineering, software engineering, and finance kind of make up the rest of the team. We all come from a professional background, and we realized early on that we need to build a high performance team that can create a cash flow business model first before we can really lever into funds into fiber R&D. Otherwise, you know, we're really going to be forced with long-term research and development costs, and we really don't want to equitize research and development. We'd rather utilize public funds to do that. We did build out our advisory board team. So, you know, Josh Hendricks we recently actually brought him on board from the advisory team. He's now full-time with Driftless. He was a former executive of CV Sciences, a publicly traded CBD company. He was a founding member of the Hemp Roundtable, the former president of the Roundtable, and he was one of the members with Senator McConnell that got the most recent farm bill across the board. We brought Josh on because we realized, you know, as former vice president of CV Sciences, he grew revenues by 367%. You know, they went from roughly 6 million in annual revenue to 54, with not that compelling of a product in our minds. And also in his minds, he was rather frustrated with the way that the company failed to innovate and bring forth competitive pricing. So we brought Josh on, and he's been really instrumental towards our growth strategy. We also brought on Todd Wagner. So Todd was the former VP of Business Development at Eurofins North America. They're one of the preeminent testers as well. Todd really helps with quality control, and additionally, he's helped build out a number of these relationships with bigger groups. We're having pretty good success penetrating the supply chain, even though it is rather full and it's a really competitive space. Todd has made warm introductions to really large companies, and has provided that segue to get transitions into organics. That's kind of the best story that we can tell in our ingredient profiles. We've got 29 USDA certified organic products to market. Those ingredients come from crude to distillates all the way up to water soluble powders. All of them are certified. The most recent is a certified CBG water soluble product. We have about 59% mean margin throughout the product lineup. And we're having really good success transitioning mid to good size brands into a certified organic lineup without having to disrupt their supply chain. So we can actually just flip a switch come Q1 or Q2 and turn over their whole portfolio and platform into a certified organic lineup. Some of the efficiencies that we've been able to generate throughout our production facilities are all continuous feed productions. That really reduces labor costs, and you can see year over year labor costs between 2020 and 2019 was pretty significant. We do care about cannabinoids, and we understand it's a cash flow business to build first, but we ultimately have the renewable materials market in mind. So we are classifying all of our plant material currently. We're using the entirety of the plant. We're classifying into herb, bast, and flower and leaf material right along the line, creating markets for all three. Big professional agriculture using things like GPS guidance, alternative spacing, row depth spacing, all mechanical cultivation, which really drives down efficiency and cost. cannabis is cultivated a couple different ways. You know, this way here is really inefficient. We have to really drive down costs to get efficiencies in a commodity-based market. We did do pretty robust install on our agriculture facility. That's really with big club pack purchasers in mind. When FDA provides good sound guidance and regulation, we feel like groups in the club pack space are really going to go into the market with their own retail brand. And in order to do that, you have to create really, really big transparent lots. You have to do that and comply with current food chain ID. And in order to do that, you have to have a systemized approach that's all mechanical. And you can see it. Industrial level equipment is kind of what we're good at. We've got two facilities. The first I just showed is the ag facility. The second facility is our production facility. Long-term lease to owns on both. On this facility I'm in now, you know, we have a 75% lease credit to purchase at 2026. It's under a TIF district now. We negotiated about 45% rate lock purchase. We have the right to purchase this building I'm in 2026 for about $250,000. It's about 10,000 square, built in 2012. Won the Green Tech Award, so we've got a big array of solar panels, a geothermal heat pump put in, and ethanol excise tax. Our municipality that currently owns our building is also providing support there, where we have a window around ethanol excise tax, which currently is prohibitive in the ethanol extraction world. We launched our own internal retail brand in the middle of the pandemic. So in 2020,
Simon, you have 6 minutes left, just so you know.
Okay, we have good, robust pickup in this brand. It's really geared for a different demographic. We're looking for males over 30 and untapped demo. Currently, most CBD brands are in the female-dominated space or the gender-neutral space, more towards a higher-end clientele. You know, we bring high-quality products, professional strength with disruptive pricing in mind. We're getting launched on March 1st across the country in a 1,500 store channel. Currently launched in Hy-Vee. Pelco is currently underwriting the brand too, so the explosive growth in this space. I'm going to transition. So phase one was really cash flow cannabinoids. We're done with that.
Simon, why don't we, because we want to leave enough questions for enough time for Q&A. You know, if you want to do one more slide or so, and then let's get into the Q&A, all right? Sure.
Yep. So we actually founded our own 501c3 in order to take research dollars. We do not want to use equity money to do research and development into fiber production. We have some partners. So Trey Riddle, a lot of people know Trey. He's agreed to essentially administer that plan for us, do a feasibility study, a market analysis, and a come to market strategy. Department of Defense and TACOM presented us with a collaborative research and development agreement with the Light Tactical Vehicle Division. We partnered in a co-sponsored grant with Hannah Dynamics, and we had a warm introduction to Ford Motor Company about a year ago. Use of the, you know, I'm gonna fast forward through the slides. It's hard to get through this in 12 minutes. We got $1 million round open. We're about halfway done. We got a $12 million pre-money val, and we're using over half of that on CapEx installations into the current facility that I'm in. It'll create about anywhere from 50 to 60% efficiency on end-line products that we are current to market with. We are cash flow positive, so we had positive EBITDA on our first year of inception. Just missed it this year, but had good robust revenue growth, and we anticipate that it'll continue.
Great, thank you. Let's open up for some Q&A. I appreciate that. So, investor judges, who has the first question for Simon? So Simon, let me ask you this really quick, and then Scott, Berman, go. Scott, go over it one more time. Simon, what's your offering? So you said you're raising $1 million. You raised, I think you said you got.
We about half. Yeah, we're raising $1 million. It's about 8% of the equity available. It is a straight line equity. It's a $12 million pre-money val, and we got about half in. We opened the beginning of last month.
Great, Scott Berman, you're up.
So you mentioned the FDA and guidance, and I noticed the other day they said we're not gonna tell you guys anything right now. Does that affect your business at all,
Yeah, it certainly does. You know, I think the pro forma that we've laid out here is really conservative in it, and it assumes that we're not going to have really good FDA guidance or good regulation. We're going to be prepared for when they do. It's one of the reasons we brought Josh on the team, is Josh is plugged into the Hemp Authority and the Roundtable. And the Roundtable is the premier lobbying body for the hemp space. So, you know, we have a lot of insight into what is happening with FDA regulation and what that looks like in the next 6, 12, 18 months. And I'm not going to really go in any further. But we feel pretty positive about what we've seen here recently.
Thanks.
Great, appreciate that. What other investor judges have questions for Simon? So Simon, let me ask you this question. In terms of the straight equity, when do you think the potential ROI will occur for the investors that you're attracting right now?
Yeah, so we've already shown pretty robust ROI. We launched pretty early in 2019, and we've raised the share price along the way as we've raised capital. We feel like that along the way that the valuation of the company will continue to kind of warrant increase in share price. I can't, just like any other company, hang out there to say that distributions are going to come and they're going to come quickly. We feel like that ROI will be realized within months for kind of any investor, and that's been the proven history of the company. We're only 22 months old.
Okay, excellent. The one thing I know, especially with the investors I represent, is there's always an ABC plan. Like in the ideal world, we're like A to happen. If that doesn't happen, here's our backup plan. And thirdly, here's a third example. And that's where also too, as you're doing your raise, it's something where you'll also attract more people. We have about 1 minute left. So with that last minute left, do you have any other investor judges that have one last question at all?
I'll just kind of follow up to your question.
Sure, that'd be great. I appreciate that, Simon. Thank you,
Dr. David. We have 6 independent producing revenue silos, 22 months after inception, that are fully independent of each other, whether they're fiber markets we're creating or they're toll processing or retail market channels. We've got a pretty robust revenue story already to market in kind of the early stages. We feel like we've got significant growth potential in all those channels.
All right, excellent. Thank you so much. I appreciate it, Simon. Make sure you put your information into the chat. Make sure you do attendees as well as panelists. Also, a friendly reminder, all of Simon's information and Driftless access is listed on the investorhotseat.com. We have one last presenting company. After this last presenting company, please remember you'll be given a survey for you, the audience members, on who was the best. While you're filling that out, judges, after this last presenter, I'll be asking all of you to pick which company is best and the reason why. So with that being said, I'd like to introduce Willard McAndrew, CEO of Centennial Asset Management Group.
Guess can nobody hear me now? Oh, hello?
You're good to go.
Okay, thank you very much. First off, good afternoon. My name is Will McAndrew. As Dr. David said, I'm the CEO and director of Sentinel Asset Management Group LLC. I want to thank everybody for allowing me to introduce our company, our opportunity, and most importantly, our team. We are providing a unique opportunity to build an institutional grade, vertically integrated company in the emerging cannabis industry. Forward-looking statements, disclaimers, we've all seen those. Who is Sentinel Asset Management Group? We believe that there is a severe lack of proper business experience and understanding how to grow a business. Who wants to start from scratch? We're buying 2 existing positive cash flow companies that provide the benefits of all 3 verticals: cultivation, process extraction, as well as dispensary. After all, business is business. We bring efficiencies and scale of operations experience. We know how to grow a business. In this strategy alone, we will be able to take a business that's doing $300,000 in revenue per month and take it over $1 million in revenue per month in 1 year. One of the many reasons we like the market in Oklahoma today is it's highly fragmented. There's no clear leader. We're not overpaying like so many others are in other states, New Jersey, Colorado, California as example, and we're not starting from scratch. We can become this leader in Oklahoma. Because of licensing status in Oklahoma, it's creating a unique opportunity in our mind. There are not any of the major MSOs in play. And because of this, we can acquire, we can streamline, and we can expand existing businesses. As an example, we are buying these first two companies at 1 year times current revenue. It's literally a steal. We're raising $7 million in 100,000 unit increments. The offering has been out for less than 60 days, came out right about Thanksgiving, so the holidays were in place. We're offering 70 units. There are only 53 units available. Closing date is February 16th. Because we value our investing partners, we're giving them a preferential return of 80% of all the net revenues until they achieve payout. If we do nothing to improve the cash flows, that's approximately an 18 to 19 month cash on cash payout. But by focusing on just 14 of the 42 strains that have high flower yield, short harvest time, and retailing 100% of our product, the payout time may be significantly shortened. The reason I am confident in saying the above is that that management team has raised capital and paid back investors numerous times before. Once we close the offering, we anticipate first revenue distributions to our investing partners in approximately 90 days. We will consider equity, debt, or a combination of both for funding. After 2.5 months of due diligence by our third-party auditors and the attorney, the reviews have been completed right around Thanksgiving. The enterprise value for both companies is over $45 million, as calculated by Green Growth CPAs. And the buildings, land, and equipment can add another $1.78 million, bringing the total value over $47 million. A significant part of any company's success is the team you build and the team you surround yourself with. Our executive team has a history of successful aggregations in multiple industries, including cannabis and hemp. In fact, one of my last companies I took to the NASDAQ exchange. It was a really cool experience to have pushed the buzzer and have my family with me on all those big screens in Times Square. Truly a memorable moment. Another memorable moment was when I was elected to the board of directors for the OTCQX Advisory Council. Also, both Gary Allen, our chairman and president and partner, who served honorably in the Navy, don't hold it against him for being in the Navy, and I served honorably in the Marine Corps, and we bring both these disciplines and values to our company today. To start our company, we completed a friend and family round for $500,000. We hired our corporate counsel, who is one of the top cannabis attorneys in Oklahoma, as well as seasoned in M&A and securities transactions. We hired Green Growth CPAs to assist us in the due diligence, set up our corporate tax structure, compliance, and assist in the quarterly audits, one of the few cannabis accounting firms out there that can perform PCAOB audits. Our team is more accustomed to the KQ type financial audits and attorney reviews. We completed third-party due diligence, hired a Colorado master grower and his grow team for our cultivation vertical, 20 years experience in cultivation, pest control, nutrients, control system, compliance, and management operations. We have one of the top recognized lead chemists for our process extraction vertical. And we have two key individuals that have built out and managed large retail units in our dispensary vertical. Again, our experience, we have revenue over $1 million per month in the first year with just these two businesses. We have several more businesses very similar to these type of acquisitions in our pipeline. In summary, we believe we're in the right space at the right time with the right team. And we do believe 1 + 1 can equal 3. And available for questions.
Great, thank you so much, Willard. Really appreciate that. So for our investor judges, who has their first question for Will? Trying to get onto the trying to see all the judges. Sorry, I'm still on the screen share. Jeff, do you have a question?
Off the screen share.
Yep, Jeff, did you have your hand up?
Yes, I did.
I'll let Jeff go first, and then after Jeff, Terry, I believe you have a question too. So we'll go Jeff, Terry, then Noble. So Jeff, you're up first.
Yeah. So just a couple of things. Are you guys a registered investment advisor?
No, sir.
Do you charge management fees?
No, sir.
So so you're looking to raise $7 million, right?
Yes, sir.
So, but you value your investments at $45 million. So I'm a little confused.
Well, when my partners and I went up to Oklahoma this last spring, and we started, putting our nose in it and was looking into everything. We found the dispensary, the processor, the grow facilities. We sat down and did a back of the napkin evaluation.
Yeah.
We thought we'd be somewhere about $22 to $23 million based upon what we saw, and that's residual and current cash flows. When Green Growth CPAs came back at 45 million, well, you cut that in half, we were about $300,000 off from what we thought the valuation would be.
Okay, so it's not that you made those investments yet; those are just in your pipeline.
Well, these are two companies that we have LOIs signed for that we're going to be closing on or before February 16th.
So if someone makes an investment now or in the next period, do they get a piece of those investments as well? Or is that a different pool?
No, sir. The investing partners that come in today, you will get the 30% of everything that we're talking about today, but you'll also own anything and everything else we do in Oklahoma. It will keep adding to the kitty as we increase cash flows. We've got several other businesses, grows, dispensaries that we would like to add to the mix at a future time. You would still own everything, a piece of everything we do.
So just one more question. So what happens if you invest outside Oklahoma?
Well, our goal is to be an MSO. We have opportunities in Colorado, as well as we have relationships. I'm from Baton Rouge, and we have relationships in Louisiana, Mississippi, Alabama. We've already met with the lieutenant governor, senators, the commissioner of agriculture, and in Mississippi. And they're telling us by the time the licenses start to get issued in August that we're in line to get one of those. So we like
one more quick question.
Jeff, I got to get to the other judge's timing. To be fair to him.
Thank you.
But great questions, Jeff. Terry, what's your question?
Yes, Will. Are you guys trying to acquire 100% of these entities or only 75%? I know there's some rules in the state of Oklahoma, about 25% being outside investors, 75 has to be inside the state of residents of Oklahoma.
Yes, sir. We're acquiring 100%, but we've set it up to where there's individual ownership. Two of the people that are coming with us, that they're selling our business to us. And so in all essence, we have a convertible note that will convert at time of sale or uplisting or converting to a C corp that we will end up owning 100%. Minus the.
Still, the question is you have to have, again, what about the other 25%? You're saying all these investors, all the owners are in the state of Oklahoma?
No, sir. That's why we have the structure. Our attorney put this in place, that we have the structure in place that we meet the requirements for the state of Oklahoma. But at some point in time in the future, if that time of sale, then the individuals that would be holding the initial licenses would get their 10%.
Okay.
Great, Terry. And then Noble, you had a question?
So, Willard, excellent presentation. Everything is on point. My own concern is you're buying these things, you said, at nearly 1 times multiple. Why are they selling so cheaply? And as an investor, what should I be concerned of if people are selling or allowing you to do basically an M&A kind of move at a 1-time multiple?
Well, we're all entrepreneurs on here, and I'm sure everybody would say at some point in time you had a bad partner. 3 of them are partners in the dispensary and processor. 2 of them are coming with us. 1 is not. And so we're basically cashing them out from their investment that they started. On the grow facility side, there's two grow facilities, one for 4,500 square feet, one for 5,000 square feet, totaling 9,500, doing about 150, 60 pounds a month. But they are building a 25,000 square foot facility. They're not getting out of the market, they're expanding in the market. And so we're able to acquire these businesses. We're able to, just for that as an example, 2.5 million is doing 2.5 million in revenue. And so they need that cash or want that cash to be able to finish out. And they're going to be probably ready. They just got their certificate of occupancy and their license is probably a month and a half, 2 months away. But once we close, they will buy 100% of our product and until they're up and running. And that's why our master grower and his grow team are already boots on the ground in the building, working with the existing grow team for the seller today. And as of last November 1st, as a matter of fact.
Great, excellent. You know what? I appreciate your time, Will. Thank you, the judges, for the questions. So with that being said, it's now time for our voting. You should see on the screen, if you are a participant, the investor pitch competition, where you can go and actually select the company that you thought did best today. All right. Once again, if you are a participant, you should see it on your screen right now, a polling question to vote for the best presentation and who you invest in today. You can only select one winner. While the audience is doing that, well, it's now time for the voting for the judges. I'm gonna go through the judges in order, just how I introduce them, and I'm gonna have each judge pick one company to give their vote to, as well as to explain why they made this choice. So with that being said, the very first judge to cast their vote, and then you can spend up to 60 seconds explaining why you chose that company, is Adam Remus. Adam, who would you choose for today?
You're going to kill me because I actually love two of them. The Iconic
you can
and
talk
Healy.
about both, but
I
you
can only talk about one.
No, you can talk about both, but you can only choose one.
Okay. I love both of them. I think that they have some great potential. But I'm leaning towards Iconic. I think it has a solid approach to move forward in the marketplace. And I like their funding model and also the integration, the fully integration. Michigan is a hot market. I'm very afraid of Oklahoma. I've had some horror stories as clients there. So I think my vote's for Iconic.
Okay, Adam, thank you. So we have a vote for Iconic on us. Excellent. The next person is Carol Ortega. Who did you vote for and why? Is Carol still here? Okay, we're going to come back to Carol. And Jeffrey Glick, CEO of Start You Up.
Hi, I like Healy the best. It great presentation, understands the market, spoke about how to grow the company. I also like companies that are not geographically hampered, let's say, where they focus on one company. It's IT, it's tech, has a lot of other uses. And I just think that it could be used for anything. And once they put in the insurance attribute, I think it could go into any type of medical industry. And if it works as well as he said it would, it's going to be a takeover target for another tech company.
Okay, great. Thank you so much, Jeff. So your vote's for Healy. Next person is John Nemanic, partner of Green Coast Capital.
I would tend to echo Jeffrey's sentiments. My favorite also is Healy, and that's a function of my background in software development and in technology. An SaaS model is extremely powerful. Current recurring revenues are excellent. It makes it very easy to run your business when you can predict within 2 to 3% what your revenues are going to be within the next month, and the scalability. So, and also what I really like about the fact is non-plant touching. Okay, this is a technology business. It just happens to be applied to some dispensaries or to doctors. So that's it. But I mean, I do want to add the other companies are really good. I'm merely expressing my own biases.
No, and John, I appreciate that explanation as well, too, because when it comes to investors, you also keep in mind that every investor has different goals. They have different short-term goals versus long-term goals. Sometimes people want a quicker ROI. Some people can be very patient with a longer ROI. So, there's a lot of factors at hand. All right, the next person I'm going to call upon is Kevin Clancy, managing partner of Clancy Consulting. Who would you vote for and why?
My vote's going to go for Tigris. I was very impressed with John Capolino's ability to deliver his pitch without his materials and still get everything across to the point where I had a lot of confidence in what he was doing. I see a lot of application in that. I kind of had like a brain explosion moment where I saw all the ways that could kind of filter into so many different areas. So I was very impressed with his ability to present and give me confidence without a deck, without materials. That kind of says a lot about the viability of a company in my mind.
Great. I appreciate you mentioned that, Kevin. And I think it's really important here for all our presentations is that make sure you practice and make sure there's no reason why you can't get your whole pitch down in 6 minutes or less. When people say there's too much to go over, that's not a good answer. And the reason why is that you are attracting people for a follow-up phone call. So for everyone listening here and the participants who's raising capital, if you have a potential investor, they say you got 5 minutes, hit them with the wow factors because you're looking for that follow-up phone call. The goal here, and you'll see in the chat room, are people saying, great, follow up with me. I have more questions. Follow up with me. I have additional questions. So for anyone trying to raise capital, always be respectful of a potential investor's time because you're looking for that follow-up phone call to keep the conversation going. And don't be surprised because I forget who said it's about you're investing in the people. You might talk to that person 5, 6, sometimes 10 or 15 times before they write that check because they want to be comfortable with you. So the next person I'm going to call is Noble. Noble, who'd you vote for and why?
Man, Dr. David, you're putting me on the spot. I think all these guys are great. We've got a database of investors that somebody would match for everybody, 100%. But if I were to take my own personal investment in focus, I love John's pitch. I love the verticals they're entering, but I'm gonna have to go with Healy 100%. Healy hits on so many solid opportunities. I look at it as a huge potential unicorn. They understand their marketplace clearly, and they've been operating on a very strong problem solution set. They saw what the fitness industry did, and then they went one step beyond and then incorporated all the alternative medicines. And alternative medicine is only going to grow, 100%. So when I looked at them and, everyone else said it, you can determine the fact that it's $3,000 a month. As a SaaS, there's incremental growth. I don't have to deal with regulation or regulators yet coming in and slowing the business down. It's 100% a service-oriented business that creates no friction for customer and client. It just fits in a nice space, and realistically, they will be a buyout target, if not by another SaaS company, or frankly, I wouldn't be surprised if an insurer picks them up or someone like CVS in order to have an integrated model to alternative medicine. I just like it. And then the copycats will fast follow. And there will be some really great copycat SaaS platforms that will operate and also reinvigorate and make Healy, once again, even more important. And they've been at it since 2017. So they believe in their vision. They've been at it, banging out the door almost 4 years. And so they get what their customer is, and they get who their client is. And that's what makes sense. Deborah's product is great, by the way. And I got to give a shout out to them. I think they're beginning to get on track, but there's just a lot of work that needs to be done on the deck, how they present, and what their value proposition is. And so, I would say Deborah and those guys come back, maybe 2 or 3 times down the line with a little bit more focus. They could do really well with their presentation because, again, it's another good tech, full integrated product. But I don't think they know what I don't think they know what they fully have to offer. And I think once they get to that point, they'll be a powerhouse as well.
Thank you for that. Thank you for that feedback. And for everyone listening, also remember that the Zoom networking link for the networking part to network with the investor judges, to network with the companies, to network with other people is also on the Investor Hot Seat website. It's also been listed several times in the chat room as well, too. Scott Berman, principal of Panther Agency, who'd you vote for and why?
So this is a tough one. I'm personally friends with a bunch of the pitch companies, and so I apologize in advance. I like Iconic a lot. I think Michigan's a great market, and they're going to do well there. I love Healy. I think they're doing phenomenally well. My vote is going to go to Abstracts. Reasoning is, as I mentioned in my question, they have a competitive advantage over many of the other companies in their sector. They deal with a lot of really amazing companies in California, the brands that they work with, so their reputation is huge. And I do believe that terpenes will become a much bigger part of the way cannabis is marketed in the years to come. As people become more familiar with flavor and taste and effect, I think that terpene formulations are going to be super important. And right now they're doing really well in California, but there's a whole bunch of other states that really haven't gotten up the curve yet. So my vote is going to abstracts.
Great. Thank you for sharing that. And Scott, very insightful information. And hopefully all the companies are paying attention. As you can tell, the investor judges are all looking for something slightly different. And Terry, CEO of American Cannabis Company, who'd you vote for and why?
Well, you know, David, when one of the pitch decks prior to this event today, I was very interested in the Bud Buds because of what they can provide. And again, understanding where your product is coming from, as we mentioned, is just the labor. So Deborah, which you guys would definitely work on that, like Noble was saying, and come back. We are based here in Colorado. So if you'd like to have a one-off conversation, I'd definitely be open to that. You know, I kind of follow with Noble there with Healy. I think it's a great opportunity. I like Drutz. I definitely like the agricultural application, especially the growing side. But today my vote would come down to abstract. Scott pretty well took most of the words out of my sentiments to it. I think terpenes is something that most people are not very aware of at this time. There's a lot of education yet to be done. I know that Maxwell has a great team. He has a great track record, and definitely can look to take this into other states. So my vote today would be definitely Maxwell, because of the terpenes, but also, again, he's not pigeonholed into the cannabis space. He's very diversified in the revenue streams that he can produce. So abstract would be my vote.
Excellent. Thank you for that. And so we have the being posted right now for the audience is that Healy right now is showing the poll results. Healy is taking the audience votes. And very, very close behind it is Iconic as well as Tigress. They're actually tied for second. So, and then third right behind them is Centennial Asset Management, and that is what the audience has voted. In terms of the investor judges, it is Healy that has taken down the for the judges vote. So we have Healy for the judges, as well as we have Healy for the audience. Now, one thing before I continue on and we do our closing remarks is everyone's looking for investment money. Ask the potential investors what kind of deal they're looking for. Ask them what kind of return on investment they're looking for. We had some very diverse companies talk today. Centennial Asset Management is taking over pre-existing companies, already bringing in revenue. They're looking to get you back your ROI as soon as possible. Some like a SaaS company could take a little bit longer to get that ROI. On top of that too, every investor has a different goal. So if someone says no to you, don't get frustrated if you're raising capital. You can always ask the person why they chose to pass on it. You can also ask them if they say no, if they know anyone in their network that might be interested in an opportunity like this. I'll tell everyone right now, a key word is opportunity. And even if you read Marijuana Business Magazine that just came out this month, they say 2021, the year of opportunity for cannabis and hemp. There's a lot of opportunities out there. So thank you, everyone, all the investor judges. Thank you for all the presenting companies. It really is appreciated. Everyone did a great job. We appreciate the effort you have put in there and the feedback from all our judges. It is truly appreciated.